I haven't been posting much recently in the past few days or the past few weeks just because I've been very, very busy. I've also been kind of sick, but in today's video, I do want to go over something very important, and it can be very misleading to a lot of aspiring traders and to a lot of traders. So, what I want to go over is the cost of a trade. So let's take, for example, this chart that we're looking at right now. We're looking at Tesla, and as we can see, the market started off a little bit choppy. We probably wouldn't have entered into a trade until about this time. Once it breaks our support level right here, would have entered into the trade right over there and just held on to it. Maybe exited and re-entered right around here, but that's besides the point when it comes to entry and exits. So the reason why I created this video is to show you how much it would cost to get into a trade and why it is kind of misleading. So let's say that the price is over here, the market is still open. It is 2:35 Eastern Standard Time, May 24th, 2023. And based off of what we see over here, how the price is hitting this level, over here, over here, over here, over here, and hit this level over here, I probably wouldn't enter into a trade right now. I would just wait and see and wait for another setup. But let's say it broke over this line, this area right here, it went above. Or let's say that it broke below this. Then I would either enter into a short over here or call over here. So let's just say in the next hour it broke over this level and it went up. I'm going to go to the trade section and I'm going to ask a call over here. As we can see, it's already set up. Set it as a market order. Set it to just one contract. I'm going to confirm and send. Now, I do get a message and a pop-up that says that the cost of the trade, including the commissions, is $445.65. Now, does this mean that I am going to have to pay that much? Meaning, is that money going to come out of my bank, or out of my buying power, out of the money that I deposited into the account to trade? Does that mean that I have to pay that much to get into that one trade, to risk that to see if I can make more? Not exactly. It's confusing to a lot of people because that's just the amount that is borrowed in a way. I guess that's the best way to put it. You can place that trade and your cash available or your buying power will go down by that amount. But based off of what you trade, listen up here, based off of what you trade, it will go back in. So let's say that the cost of the trade is $450 and you enter into a trade and you make $100 on that trade. That's $400, that's $100. You will not lose that $450 for the cost of the trade. Let's say you got into the same trade and you lost $50. You will only have $50 taken out from your initial investment. And this is where a lot of people are thrown off because they see the cost of the trade and they think that it's going to cost them that much to enter into the trade, meaning that it's already going to be lost. So I just wanted to make that very clear because you entering into that trade, it's just taking away from the buying power. And the buying power is basically how much you can afford to trade. So let's say you have a let's say you have a $25,000 day trading margin account, meaning you can make more than 3 trades in a day and you have 2 times the buying power when it comes to stocks. If you have a margin account with over $25,000 in it, so you're allowed to day trade, your funds will settle instantly. Meaning, if you get into a trade and you close out of that trade, that money will already be settled in your buying power, so you can trade more. Now, in comparison to a cash account, where if you're trading, you place a trade, and let's say you have, $1,000 buying power, and you win in that trade, and you make money in that trade. Let's say you make $500 on that trade. So now your buying power, it seems like it should be $1,500. It would be $500 until the funds are settled, which is usually the next day. But anyway, back to that idea of the trade. So let's go back to the trade, and let's just throw in 10 contracts and see how much that would cost. That would mean that it would cost $4,606. Meaning you have to have that amount in your buying power in order to trade that. Now, it doesn't mean you're going to lose that money. You can lose $1. You can lose 25 cents. And that for those $4,000, it will still be reflected in your account. It's just saying that you need that much in there. So don't get distracted, don't get sidetracked, don't get misled by that number. Just know that is how much you have to have in your buying power to enter into that trade. You're not taking money out of your pocket and giving it to them just to enter into that one trade with hopes to make that much, or knowing that you're going to pay that much to risk that. So, with that being said, I just wanted to go over that, create this short little video for you. As we can see, we're still watching the market. It's hitting our level over here, hit our resistance level here. That resistance later on turned into the support over here, and now it's turning back into the resistance, same as this. This is the support over here. It's hitting this. It might just bounce up like that, might go above, might go down. We'll see what happens if it crosses our line. I mean, it did a little bit, but I'm just gonna wait. If it crosses our line right over here, then I'll buy. If it crosses over here, then I'll sell. As for right now, I'm just gonna have patience and wait.